Welcome to today's video. It's your boy PointFX, and today we'll be talking about trades we took on USDCAD this week. So the trades we took are based on ICT concepts and demand and supply, specifically order blocks and demand zones. So let's watch out as we dive in. Guys, the good things about this industry is that you can apply your trades, you can take your trades, and you can exit the market anywhere in any part of the world. As you can see, we're in the jungle and it didn't stop us from taking those trades. So watch out as we dive in and see what we did this week in USDCAD. So this is USD Canadian dollar. So what we did is to go through with our chop down analysis. So we just have to identify the trend and look for a potential places we can buy, especially demand and supply zone. So once we identify that the present trend we have is bullish, we'll be looking for a demand zone. All right. So and when we identify that the trend is bearish, we'll look for a supply zone, and as well another block or any other possible confirmation like fair value gap, liquidity hunt zones and the rest. So this is the particular USD CAD. So this is 1 hour. Let's look at what the market did. When market created this double liquidity zone here, market came back with this high impulse, broke a structure. So immediately market took out this structure with this. We looked at the next possible scenario that the market would do, but first of all we identified the next high. All right, so this is the next high or the next structure we anticipate the market to take out. All right, look at it. All right, so after taking out this side, look at the next structure that the market took. So what we are currently doing here is identifying the structure of the market. You can see there is a structure here, but it's not so obvious, so I will not put line there. I'll put it this zone. All right, so this is the next structure here. So what happened is that when we came on Thursday, we observed this market making this total sweep on Wednesday. So we already know and we are waiting for a retracement to any possible demand zones or any confluence at all. So that was what we are looking at. So we finally found out that this 1 hour time frame, the market is trending up then. So we have to step down to our 15 minutes time frame. All right, in the 15 minutes time frame, the market that we took the entry for is when we discovered this particular move here. All right, so look at this particular move. Market made a high, right, a low, made a higher high. So immediately we identified the market making this higher high. We came back to find a confluence at this particular low here. All right, so we had to have something like this in 15 minutes time frame, and that is this zone of order block. All right, this is a zone of order block. So if you know what order block means, in a bullish market, order block is the last bearish candle before the rapid bullish move that took away a structure. All right, so this is what was spotted on Thursday. So when we saw this on Thursday, we came here and put our entry. So we came here and put our entry. This was where our entry was, and this was our stop loss. We have 2 pips below the low, and we have our TP to be this next liquidity zone. So this was what we did on Thursday, and as you can see, market just came and took us in the market, and after that rallied to hit our TP. All right, so after market hit this TP, we saw another entry. We saw that there was a structural break as well here, this place. All right, that was the one I said there is a tiny break and I wouldn't want to represent it in higher time frame. All right, so when market established this, we still looked out for a demand zone because already we've actually found out the trend of the market. So we still came down and use our rectangle to beat the demand zone. All right, this time around we'll have something like this, of course. And remember, whenever we have this, our TP will always be at the nearest high because of liquidity clearing. All right, so we'll have this. This becomes our second order. We have something like this. Of course, you know, normally our SL is 2 pips below the swing low. So this is 10 pips, the 10.9, the 2 pips is 12.9. All right, this is 12.9 pips, and our TP was here. So automatically you have seen this was our second order in USD Canadian dollar, and this was a perfect setup, and it's based on ICT concept and demand and supply. All right, so these are the 2 trades we took on Friday, on Thursday and on Wednesday. All right, so if you can clearly see what happened, you now see that this order was based on order block. A market created this first one. If you can see clearly, you will see that this first one was clearly based on order block or ICT concept, and as well it has a term or a name in demand and supply. So market broke a structure here, and we waited for a market to retrace back to this zone before we initiated the order. All right, and market rallied to hit our TP. Now the same thing happened at the second order. Market came and created this order block, this zone. After taking out this high here, market retraced to this zone, and we were able to initiate the order and went up with the market. So if you can observe clearly, this first entry here and the second entry, they are based on, you can, if you are an ICT trader, you have a term for that, while as well if you're a demand and supply trader, you still have a term for that. All right, for example, this market, after making this high, made this low and broke the structure here, this particular yellow line here, trend line, it broke it and rallied up to this zone. So what we just had to do is to wait for a market to retrace to the order block at this zone. All right, so that's what actually we did, and when it came there, it took us in with a sniper entry, only for the market to come back and hit our TP, and that was what happened in this particular one. So the second one is still the same concept that the market did. Market made a high, made a low, all right, made a higher high. All right, then when this was established, we just came here and identified the demand zone, all right, which is still has a name with ICT concept, all right, which is as well the order block. All right, but the only thing is that this particular one has an inducement, which is at this region. This is an inducement that induces a lot of people to enter the market before coming back to pick this major order block here, and market went up. Then we just had to come and wait for the market to retrace and take us in here. All right, we just have to come and wait for the market to retrace and take us in. When it took us in, we thought the market is going to take our stop loss, but abiding by our street discipline, we just need to understand is either the market hits our stop loss or hits our take profit or hit our trail stop loss. So but market, fortunately for us, they didn't go down to our stop loss and came back and hit our take profit. All right, and that was the 2 trades we took in this USDCAD on Wednesday and Thursday. So if you can see now, you see that this is a risk of 1 to make 3.5, and this was a risk of 1 to make 2.3 R. Right, so this is what actually depicted in the market on that USDCAD this Wednesday and Thursday of this week, and we took advantage of that. So just as I say, Forex will make you limitless. Anywhere you are in any part of the world, you can participate in the market as far as you have a mobile or smart device and your internet connection. So distance is never a barrier. So it's a very good skill if you can lay your hand in any of them and be dedicated to learning the rudiments and the basics of the market, because you will forever be grateful with that. If you like what you've just watched, you can like the video, subscribe and share it with your friends. Remember, we can all succeed together and we can all be financially free. Point FX is out to help traders succeed.